Morning everybody, it's Chris here from Serene Education with a continuation of this morning's analysis for the 1st of September 2010. Just going over the sterling against the US dollar pair this morning with one of our students, and we've noticed that during the Asian market trading session, sterling has reclaimed most of that down movement it posted yesterday, almost going to half of it now. Euro news has just come out, and German retail sales were not as great as they thought it would be. So is sterling going to grab hold of it and use this initiative to gain a bit of ground today? The only downside we're seeing today is this very strong resistance area at roughly, let's have a look here, at roughly 1542.80, that area. Be aware of it. Bear has broken below the range in the last couple of days, slowly making its move downwards. Bit of a bear trend, capping it all off. If I can just find, and now could this be a last attempt to try and find some foothold before we probably see some more movement to the downside? Our CTC has gone bearish for the first time in a very long time on this pair. Back in mid-June we've been bullish on this, and now for the first time we've got a red across the board. Just be aware of that. So if the pair fails to break higher today, or we could see another exhaustion candle taking place, but ideally what we want to do for anybody who's trading long-term bearish is see a break below the previous low here at 1533 at least. Got to be trading below this range here to start with, and then your first target would be ideally down the bottom here, this range here just below, between 1520 and 1515, followed by the one down here at 1495, that area. So let's see what's happening intraday. Well, that extension's happened. You can see sterling has been on a beautiful move all the way through this morning. Asian market trading, capitalizing really nicely. Some entry levels along the way, particularly this morning. There's a bit of a squeeze pattern, a consolidation this morning, guys, using those moving averages really nicely, but it's looking favorable. So we've got SPY, buy, and buy. So our intraday trading all meeting our criteria, but just be aware, the higher it goes, the more bum is exposed. So they say. And we've got this previous support resistance coming into play now, and ultimately the breakout that we saw yesterday around 1546. And as I said to you on a daily time frame, a lot of resistance above. So this resistance area here on a 30-minute chart is going to be that resistance, the 200. This area here is going to be important today, 1546. We could see it play all the way up here, but it's going to take a lot of momentum for it to break above this. So it could be a bit of consolidation after this move, people selling their positions, buying back their positions, and then we could probably see a continuation to the downside. But make sure all your boxes are ticked in terms of your strategy, your money management, and then act accordingly. Okay, very important. You don't want to be faked in any moves in the morning, so just be aware. We are going to be testing this area here, and we have that all important 200 period moving average because we're in a bearish trend, remember, coming into play. And look at that, previous support resistance, smack bang on a 200 period. So there's another 30 pips to be taken from it, but will we see more today? It'll be different. Okay, I'll be back with the, what do we got next? The US dollar chief next. I'll be back in a couple of minutes. Take care.